Phoenix, Arizona's housing market. Can we expect another 50% decline in home prices just like what happened 15 years ago during the last housing crash? That's the topic I'm going to tackle in this video. We're going to use data, deep data on Phoenix's housing market, everything from home prices to job growth to migration to housing construction, to figure out whether now in 2021 is the right time for you as a potential home buyer or real estate investor to buy into Phoenix. Guys, this is a recurring series I do each week. I cover a new market across America in terms of deep data on the housing market. I'm super excited to do Phoenix today. This has by far actually been the #1 request I've gotten from you guys. Phoenix is one of the hottest housing markets in America. More and more people move to Phoenix than any other city in the US. I think the number is over 250 people per day are moving to Phoenix, and that's causing a big increase in home prices, especially over the last 3 years. And so what we really need to fundamentally determine is whether it is safe for you to buy in Phoenix right now. Will you get hurt? Will you experience a decline in value and a loss in equity if you buy in Phoenix in 2021? That's the question we're going to be answering in today's video. We're going to be using data to do that. All right, guys, let's get into it. The first place we need to get started is by establishing some historical context to understand how Phoenix's home prices have behaved over the last 25 years. And we can see that Phoenix, the yellow line, is a much more volatile housing market than the US average, which is the gray line. And if we go all the way back into time, we can see back in 1997, the typical price of a home in Phoenix, according to data from Zillow, was $120,000. And there was some kind of marginal growth in that price through the late 90s, early 2000s. But we can see that right around 04, all of a sudden, home prices in Phoenix went vertical. They escalated all the way up to $307,000 in May 2006, and this was the peak of the previous housing bubble in Phoenix. Prices at about $307,000 for the typical home. And then what occurred over the next 5 years was an unmitigated disaster. Prices in Phoenix crashed all the way down to $133,000 in mid to late 2011. So prices declined by 57% from their peak. And basically in August 2011, the typical price of a home in Phoenix was the same as it was in the late 90s, which basically meant that homeowners and investors in Phoenix lost everything during the last housing crash. And this is important context to remember because I think Phoenix in a lot of ways is different today, but just remember that there was a lot of pain in this housing market not too long ago. Now, we can see that since 2011, Phoenix's housing market is bounced back, right? We see big growth in prices in 2012, 2013, moderate growth in prices 2015, 2016, 2017, and then a big surge over the last year and a half, all the way up now to a typical home price in May 2021 of $367,000. We can see now that prices in Phoenix are above where they were before the last housing crash. But I think what a lot of you want to know is, where are these prices going to go in the future? Like, are we going to continue to see them go up vertically? Are they going to flatten out a little bit? Or are they going to go down? Are we going to see another big decline, potentially a 50% decline in home prices? So in order to answer that question, guys, if Phoenix is in the crosshairs of another big housing collapse, we need to look at the fundamentals of Phoenix's housing market. We need to understand how many homes are being built now compared to the last housing crash. We need to understand how many jobs and people are being added to the economy now compared to the last housing crash, and where prices stand in between. And if that suggests that the market now in Phoenix is mature and stable, or if it's still kind of a volatile market that has a lot of downside. And where we're going to start is actually by looking at housing supply. How many homes and apartments are being permitted and built in Phoenix? Because this is really where, in the last crash, 05, 06, 07, right before the last crash, Phoenix really got into trouble. Quite simply, there was a lot of overbuilding going on in Phoenix back in the early to mid 2000s. Local builders were just throwing up homes left and right, and people were buying them. There was loose credit standards, there were subprime mortgages. It was very easy for people to buy those homes. And Phoenix was building more and more new housing around 02, 03, 04, 05. And while times were good, people were buying the homes. But as soon as that growth abated, Phoenix was left with a lot of housing units, a lot of vacant housing units. And that's what really caused not only the depth of the last housing crash in Phoenix, but the extended nature, the 5-year nature of that housing crash. You guys can see what I'm talking about on this graph, where we're looking at the permitting of single-family homes in green compared to multifamily and condo apartments in blue. And this is basically representing the amount of permits pulled over the preceding 12 months at any particular point in time. And I don't really even need to explain this graph too much, I think, for your eyes to be drawn to the situation that was occurring in the mid-2000s. We see that prior to the mid-2000s, Phoenix was around 35 to 37,000 housing units permitted, or single-family permits per year. And then that just spiked. Look at that spike all the way up to 60,000 in '05. And it's really kind of this area here, '03 to '06, where Phoenix just built way too many homes. And when you build way too many homes, you enter a housing glut, and home prices are inevitably going to go down. If you guys are liking the data I'm showing in this video, just make sure to hit that like button. When you do that, it gets me a bit more exposure on YouTube, helps me out, actually allows me to create more of this content going forward. Additionally, make sure to comment on the video, especially if you live in and around the Phoenix area. I want to hear what your perceptions of the market are. What are you seeing as a buyer and renter out there? When you guys comment, it makes these videos better. All right, guys, let's get back to it. Now, what's interesting is that during the last housing crash, not only did prices go down, new building collapsed. I mean, the amount of new permits for single-family homes bottomed out at about 7,000 in 2011. So literally, single-family construction and permitting went down by 90% in the last housing crash in Phoenix. And then what really happened is that it took a long time for this permitting to bounce back, right? 2013, 14, it was only at around 14 or 13,000 a year. And it really wasn't until 2016, 17 where we started seeing a real rebound in single family permitting. And kind of the low nature of construction from 2010 to 2015 created a shortage of homes in Phoenix. And I think it's that shortage of homes from 2010 to 2015, which is really propelling the Phoenix housing market over the last couple years. And now basically they're trying to play catch up. We can see that over the last year, the amount of permitting has spiked up to 38,000. We're kind of going vertical now. The amount of permitting has increased by about 35% in the last 12 months. So now, only now in May 2021, are we starting to get back to some of those same permitting levels around 2000s. But even then, you can see we're still well below the crazy levels of building in '05, '06. So I think it's unlikely Phoenix experiences another 50% decline in home prices and another 5-year housing bear market, but simply they're not building enough new homes in Phoenix to justify that type of decline. So that makes you feel much better about buying in Phoenix today, is that the supply dynamics are much more oriented to continued growth in the market. Now, of course, supply is just one half of the equation, right? We also need to talk about demand. Demand, how many people are moving to Phoenix each year, right? How much is the population growing? This is fundamentally what's going to determine the demand for real estate in Phoenix. And once again, we need to use data on this, and we need to go back and look at what the numbers are today and historically to get proper perspective of the demand dynamics in Phoenix's housing market. Because one thing that really bothers me, especially in a Sunbelt growth market like Phoenix, and you could add markets like Austin and Tempe to this list, is that people often just say, hey, the growth is good, so the housing market can't decline. I see that argument all the time. People seem to think that high migration, high growth markets are more insulated from a decline than low growth markets. But guys, it's actually the exact opposite. The more growth that you have and the more people you have moving in and moving out, the more destabilized your housing market becomes. Now, in the short term, that migration and growth is great, right? It provides that immediate demand for housing. But if all of a sudden building starts to adapt to the levels of migration and prices start to adapt to the levels of migration, real problems can set in if all of a sudden that migration goes down. And so on this graph, guys, we're looking at the 3 components that make up Phoenix's population growth and real estate demand. Net migration in yellow, births in blue, deaths in orange. And it's just really the combination of these 3 things that simply determines how much demand there is for real estate in your market. And let's start with net migration, the yellow line. Again, that's the people moving in minus the people moving out. And in 2020 in Phoenix, there was positive net migration of 89,000 people. And that was actually number 1 for any metro in the US. More people moved to Phoenix in 2020 than any other market. That's 250 people per day. And guys, quite simply, those growth numbers are ridiculous. No other place in America matches them. And these, high migration numbers and the increase in migration in Phoenix over the last 4 years or so is one of the driving forces behind the home price appreciation we're seeing. However, we need historical context here. So if we go back in time to the early to mid 2000s, we can actually see that Phoenix's migration levels of today are not unprecedented by any means. Like, in fact, Phoenix was actually adding more people in '02, '03, '04, '05. You can see in '05 and '06, positive migration went up to 124,000. Phoenix was actually adding more people in the early mid 2000s than it is today. So guys, remember that. Phoenix was adding more people in '05, '06, and it still had a 50% decline in home prices. It's not as if high growth and high migration precludes you from having a housing crash. In fact, it's quite often the opposite. Now, why is it the opposite? Well, just take a look at what happened to migration in Phoenix after '06. It plummeted all the way down to plus 20,000 in 2011. Still a positive number, but if all of a sudden your housing supply and housing construction was being built to meet maybe 80 to 100,000 new people, and you only have 20 to 30,000 new people, that's going to create problems in your housing market. The other thing I want to point you guys to is the orange line, which is deaths. We can see that there's been a big increase in deaths in Phoenix over the last 10 years, and this is not just in Phoenix, it's all around the country. Any area with a significant elderly population, we know there's a lot of retirees in Phoenix, you're going to start to see a lot more deaths in these markets as baby boomers continue to age. The oldest baby boomers are now 75, and over the next 5 to 10 years are really going to enter a cycle where a lot of them unfortunately are going to die. That is not good for real estate, because if people die, that's, one person dies, that's one less housing unit, home, or apartment that's demanded for real estate. So this death count in Phoenix is likely going to increase significantly still into the future, and that's going to tamp down some of the demand for housing in the market. And a lot of your impression about whether Phoenix is a good or bad market to invest in right now is going to come down to what you think is going to happen with that yellow migration line. It was plus 89,000 in 2020. Do you predict that's just going to continue to increase to plus 100, plus 120, plus 130,000 over the next 4 to 5 years? I think a lot of people in Phoenix are going to say yes, they're going to predict that. I'm skeptical that that's going to happen because, as we saw, there's a kind of historically a cyclical nature to this migration in Phoenix. And if you look at other markets, there's also the same cyclical thing going on where the migration tends to surge and then it tends to decline. So I think in aggregate, Phoenix is a market that I would be careful in right now. It's not a market that I would completely avoid. I do have an avoid list. I'm saying avoid a market like Austin, avoid a market like Boise. I'm not saying avoid Phoenix. I think there's still a compelling enough growth story, and the new building is not high enough yet to say that you should avoid the market or exit the market, but you should just be careful because, for instance, I was on Zillow before I did this video and I saw a lot of listings in Phoenix right now that were flips. Basically, homes that were bought in the last 12 months that were simply relisted at about a 20% premium to what they were purchased for, and there was no renovations or upgrades done to those homes. When you start to see that type of flipping occurring in a market, it's a telltale sign of a bubble. It's a telltale sign of froth. So what I would say in Phoenix is a 50% decline going forward is not going to happen, but I wouldn't be surprised if we see a 20% decline in home prices occur over the next couple of years. Now, you as a buyer or a real estate investor need to determine whether you can accept that type of decline in prices if you buy today. If you're a long-term homeowner, if you're a long-term investor, you might say to yourself, that's fine. I don't care if prices dip over the next 2 to 3 years because I know in the long run they'll rebound. And I think for people with that mentality, Phoenix is a market that you could still buy in today. However, if you have a more FOMO-driven mentality, if you're just looking for a place to park money, Phoenix is a risky market for you to invest in because there's going to be a big increase, in my opinion, in liquidity in this market over the next couple of years and price declines over the next couple of years. So if you're more of a short-term mindset, if you're having to compromise on the type of home you want to buy, if you're just throwing money at an investment property, I would say stay out of Phoenix right now. But if you have a more long-term mindset, it's, I think, a good market to invest in. Now, guys, Phoenix is a big metro area, a lot of land, a lot of different neighborhoods, a lot of different zip codes. We need to also dig in more granularly and understand on a neighborhood by neighborhood level what's going on in this market. Because I think there's some key insights that you can draw from looking at specific demographic indicators by neighborhoods to find the ones that are the most secure and have the best growth potential. The first place I'm going to start is by looking at what the appreciation has been over the last 5 years across Phoenix by neighborhood. And there's big differences in how much growth is going on. Let me show you what I'm talking about. So guys, on this map, we're looking at every single zip code in the Phoenix metro area, and boy, you can tell it covers quite a large geographic area, and the color coding is tied to how much home prices have appreciated over the last 5 years. So the more green a zip code looks, the higher that appreciation has been. The more translucent or gray it's looked, the lower the appreciation. And if we zoom in kind of to the center of Phoenix, we can see that one of the biggest pockets of appreciation and growth is this area around Central City in downtown Phoenix. We can see that a zip code like 85034 is appreciated by 122%. That means prices have more than doubled over the last 5 years. Zip code like 85009, a similar thing has occurred. Prices have more than doubled. Same thing in 85040. So this pocket of green here in the center of Phoenix is where the most appreciation is occurring. Now, if we zoom out and kind of go a little further northwest to places like Glendale, Peoria, Sun City, and El Mirage, these are also areas with a big appreciation, 80 to 90% price increases over the last 5 years. And so this is where a lot of kind of the froth and run up is occurring in Phoenix's housing market right now. If we actually look northeast, we can see much lower rates of appreciation in some of these higher price zip codes in Scottsdale, 85260, 50% appreciation over 5 years. Still good, but not quite the 110% we're seeing in other zips. If we go to 85054, 42% appreciation. 8253 in Paradise Valley, 47% appreciation. Now note, the typical home price in 85253 is $2 million. And generally at this point in the housing market cycle, where I think we're in a big housing bubble, I tell people to tread carefully on buying into neighborhoods with crazy levels of appreciation over the last couple of years. Because the more that home prices go up, especially in an area which might not have solid demographic fundamentals, the more downside there is when prices in the housing market burst. And in particular, in a lot of those zip codes in Phoenix, in the center of Phoenix, that have had crazy appreciation, what do they also have? They have very high poverty rates and low incomes. Low incomes, high poverty rates, and crazy appreciation. That's a combination embedded with a lot of risk. And in fact, it was like these same exact type of zip codes that got hit the hardest during the last housing crash. So we're probably going to want, if your security is your mindset, right, and you want to buy and you want to feel safe, I would tread carefully and avoid some of these areas with higher poverty rates. And you can see what I'm talking about on this graph, where the color coding is now adapted to the poverty rate in the zip code. And the more orange the zip code looks, the higher the poverty rate. The greener it looks, the lower the poverty rate. And the first thing that jumps off the page here, guys, is just how the center of Phoenix, the areas with the highest appreciation, well, they're the ones with the highest poverty rates. I mean, we're seeing poverty rates of 34% in some of these zip codes that we just reviewed as being the highest appreciation ones. Guys, 34% poverty rate, over 1 out of 3 households being below the poverty line, is extremely high. These are extremely high poverty areas, and the fact that prices have gone up so much in an area with really high poverty is concerning to me, because I'm skeptical on the ability of locals who live here to absorb those price increases. I think it's actually a lot of investors in these zip codes that are buying up these cheaper homes in cash and trying to sell them and flip them at a profit. We can see that as we even go northwest to a place like Glendale, the poverty rate is stubbornly above 30% in this entire region. If we zoom out, we can see that the lowest poverty areas are kind of on the fringe, the suburban fringe of Phoenix. We go to Scottsdale, we go further north to the northern part of Maricopa County, we go west to Surprise and Waddell and Goodyear. These are the lowest poverty rates, as well as going southeast. If we head towards Chandler, Gilbert, these areas also have lower poverty rates. The other thing I want to point you guys to is age, the age of the people that live in these neighborhoods. Because as I pointed to earlier, the amount of deaths occurring in Phoenix is skyrocketing, and it's going to continue to skyrocket going forward. And it's going to principally be located in areas with that are more retiree communities. And these are areas that I would also probably avoid buying in, because over the next 5 to 10 years, it's likely there's going to be a lot of inventory hitting the market in these locations, sadly, because people are going to start dying. Now guys, we're back to the map, but now the color coding is related to median age. And the more green the zip code looks, the younger it is. The more orange it looks, the older it is. Once again, guys, we can see there's an inverse relationship here. A lot of the areas with higher poverty towards the center of Phoenix actually are some of the youngest areas with median ages of 26, 28, 30, 26. Now, I don't think you want to buy in these areas because they're young, because as I said, the poverty rate is really high. However, you probably want to avoid buying in a zip code like 85375, Sun City West, where the median age in this zip code is 74, right? Or 85387 in Surprise, the median age is 64. These are like heavy retirement communities that I think are going to have a lot of inventory hitting the housing market. I think what you guys want to do is you want to find the sweet spot. You want to find a neighborhood that combines a lower poverty rate with a younger population. You know, and some of these areas might be, for instance, 85016 is a zip code where the median age is 38 and the poverty rate's also pretty low. A lot of these areas southeast that we talked about, like Chandler and Gilbert, they have low median ages, low poverty rates. Potentially these areas southeast would perform a little bit better during a housing downturn. So what you really want to do is combine these metrics to find the ideal location. If you guys like this content, make sure to subscribe. I come out with a new market deep dive every week. If you want to see me cover your market, make sure to give this video a like if you haven't done that already. If you already have, don't undo your previous like. And then leave a comment and let me know what city you want me to cover. The reason I did Phoenix was because so many of you guys said you wanted to see Phoenix, so make sure to do that. All right, guys, until the next video, this is Nick from Reventure Consulting signing off.